Two of the UK's biggest gambling companies on Friday said their first half revenues had been hit by the implementation of safer gambling initiatives ahead of a long-awaited reforms to gaming laws. Flutter, which owns Paddy Power, Sky Bet, and Betfair, said on Friday that UK revenues fell by 4% in the 6 months to June 30th, compared with the same period last year. Online gambling company 888 said half-year revenues from its UK businesses were down 25% year-on-year. For more on these headlines, we're going to cross over to London, where we're joined by Lukman Otunuga, Senior Market Analyst at FXTM. Lukman, good morning to you. Good to see you. I begin with the UK GDP figures. What do you make of those numbers coming out?
Good morning, Walters. Happy Friday. I remember our last conversation, we spoke about how a storm was brewing in the UK economy. And already we've seen the early signs. We've seen that economic growth for the second quarter has contracted 0.1 compared to that surprising 0.8% expansion we saw in the first quarter. If you put all the pieces of the equations together, we see the inflation beast squeezing household consumption, which remains the engine of growth for the UK economy. Now, with inflation at a 40-year high and showing no signs of slowing down, the outlook remains gloomy. On top of that, people in the UK are not only dealing with, rising food prices, rising cost of living. We've got rising energy prices. It's through the roof. People are roughly paying between anything from £2,500, £3,000 a year on energy. Now imagine that jumping to over £5,000 as forecasted. It's going to squeeze household income even more, resulting in the UK economy being in a really not so pretty place. And, I don't really want to sound too gloomy, but on another side of the equation, there's the political uncertainty as we look for the new Prime Minister and the post-Brexit related noise. So it makes sense why the Bank of England has been highly cautious when it comes to raising interest rates to not tip the scales. Looking at the British pound remains under pressure as weakened against every single G10 currency this month. And I think as this negative narrative holds on, pound weakness could be a main theme across the FX space.
Thanks a lot for that, Lukman. So you mentioned the Bank of England. They're saying that UK growth will be, in fact, there'll be no growth in the UK for 2 years. Is that being really extremely bearish, or what do you make of that forecast?
Certainly, I mean, they have their cause to be bearish because it will take quite a while for inflation to come down from those 9% levels. Remember, the Bank of England's inflation target is back around 2%. So it's going to take quite a way for inflation to get back to normality. And at the same time, as they're hiking interest rates, this is likely to impact consumption. So it's a case of using one poison to kill another poison. So it makes sense why they're quite bearish. And at the same time, outside of the UK economy, we've got, concerns over how China is reacting, the developments in the United States, emerging markets, Asia, they're all going to impact the outlook. So yeah, they have an idea saying that probably 2 years. I won't be surprised even if it's longer, because remember, the UK economy is not only dealing with what's happening with the surging inflation due to the soaring commodity prices with Ukraine and Russia. We're still, dealing with the backlog of COVID-19 and the negative impacts it's had on the economy from 2 years ago.
So what about global markets? How do you see markets rounding things up this week?
It's funny because, while things are gloomy in the UK economy, global markets are, the bright spot today. I couldn't help myself chuckling. European markets are green. US futures are flashing green due to the fact that, concerns over easing inflation in the United States, the Fed stepping back on its aggressive approach towards interest rates seems to be, supporting stock markets. Even earnings seasons weren't as bad as most expected. And this is feeding into the positive market mood. I think, short-term, medium, long-term, short-term stock markets still have the potential to push higher, but medium to longer term, we have to keep in mind that the fundamental drivers, keeping equity bears in control still remain firmly intact.
You mentioned the pound facing some weakness. What about other currencies? I think we're looking at that earlier. What do you make of how they've been performing so far this week?
Certainly. Let's start with the king dollar. Okay, not so king dollar. The dollar has had a really good week. You have to keep in mind that there are three major factors supporting the dollar: interest rates, the strength of the US economy, and its safe haven status. Now, number one, now the Fed is not expected to be as aggressive. That's taken one of the wheels away from the from the dollar. Secondly, even though the U.S. economy hasn't, said it yet, but the 2 consecutive periods of contraction has fueled concerns of the largest economy in the world. The final thing is the dollar safe haven status. Remember, the market move this week has been somewhat positive. Hence, we're seeing the dollar weaken against most G10 currencies. My question is, the first half of 2022 was all about dollar strength. Could the second half of 2022 be dollar weakness, where the dollar steps off the throne and gives the power to another G10 currency? Looking at the Japanese yen, yeah, we've seen the yen, move here and there, but again, the Bank of Japan still remains one of the most dovish central banks, and the yield differentials between the Bank of Japan versus the Fed, the Bank of Canada, Bank of England are likely to result in yen weakness still remaining a key theme, despite the bursts of strength we've seen over the past few days to weeks.
Only 30 seconds, Lukman. Oil, can you give us a quick take on oil prices?
30 seconds, oil prices are going to remain a battleground for bulls and bears. It remains pulled and tugged by conflicting themes here and there. The perfect thing was this week. We saw the OPEC say one thing, EA say another thing. On Thursday, OPEC cut its forecast for growth for world demand by 260,000 barrels a day, while the IEA raised its forecast growth demand to 2.1 million barrels a day. At the same time, we've got geopolitical risks to look out for, the developments involving Russia and Ukraine, China's demand, the fact that Biden was asking Saudi to pump more oil. There's so many things in this messy mix for oil, and this is going to result in more volatility. But just to clear off, keep in mind, 2 years ago, there was a drop in oil investment and exploration. If market conditions continue to tighten, this should keep a floor on oil despite the volatility we're seeing in the short to medium term.
All right, Senior Market Analyst with FXTM, Lukman Otunuga. Lukman, always a pleasure having you on. Thank you so much for taking us through those headlines. Appreciate it.